The broadcast is now starting. All attendees are in listen-only mode.
Hello, world. This is Sherry Zhao calling all the way from sunny, beautiful California. And I'm hosting this webinar. It's very exciting. It's a once a month webinar. We do it on the fourth Monday of the month. So if you and your friend like to check about this again, so you can always come back to us next time at the fourth Monday of the month. And today I have our special guest, as you already see his name, Robert Watterson. And this gentleman, actually, I got personally had a pleasure to meet last year when I was in Toronto during a company convention. So I got to meet this gentleman and got to know him actually uh, uh, get to know him just last few months doing conversation through the recommendation of from someone that in my business and saying how amazing this gentleman is and who has wealth knowledge about taxes. I always have headache to find a good someone who's really good helping people on taxes. And I had tried so many different tax preparer, tax person, accountant, CPA, CA, CGA, CMA, whatever title they got. But I always not too satisfied with their services. They are either too conservative or they don't know what they are talking about. So when I talked to Robert, I got really good feeling. Like he knows the how to file a tax. That's especially for someone like me. I have a home-based business, and my home-based business operates around the world from my home. So I really appreciate that I actually get this opportunity to meet with gentlemen last year and also get to know him last few months. And this gentleman has over 30 some years in the financial field, and he has done taxes around the world, especially of course in the U.S. and Canada. He's based in Toronto, Canada, which is where my company is right now, and he's actually also investigated um, a lot of businesses, and to make sure that the business is legit, is good, is long term, is longevity and everything. So he actually now he's officially my tax accountant. So and I get him to do my tax, and I feel really confident because he knows the language I'm speaking. Not everyone knows what I'm talking about. What are you talking about inventory accounts? What are you talking about a home-based business? Not many people understand that, and he understands exactly what I'm talking about. So I feel a big release, and I'm very as my pleasure actually have him to speak on this subject, which all of you care about. That's why you joined this webinar tonight. So, Robert, are you here with me?
Absolutely.
Okay, great, Robert. I'm so happy that we got opportunity to discuss about taxes and get to know you and your background. And please take it away and share with us how we can put the hammer away and get the taxman to pay you.
Well, taxes, I think, for most people tend to be a little bit on the boring side, but I enjoy them an extreme amount. Thank you very much for your introduction there, Jerry. That's very, very kind.
Thank you. Take it away, please.
No problem. I know we have people joining us from all over the world tonight, and that is amazing. We will discuss things from anywhere that you want to talk about. We will actually have questions as well at the end if you have any types of questions about anything. I don't know everything, but I can either try to find the answer or find somebody who knows the answer or try to answer it myself. if you do have a question. So let's get started on getting the tax man to pay you. And of course, my name is, as Sherry mentioned, is Robert Watterson. I'm a federally licensed tax professional and a provincially licensed financial professional. I have over 30 years, closer to 35 years, experience in government, corporate, and personal finance and taxation, which just means that I'm a numbers geek, I guess, and have been forever. I am a forensic accountant. I got my training through the military. I was a forensic accountant for the Department of National Defence in Canada in uniform, and went on from there. And now am operating my own company for the last 30 years with my wife Sandy in Caledon, Ontario. So first of all, before we go too far, I always like to let you know that what we're discussing is specifically subject to individuals. The paperwork or the actual information is in general. It is not exactly perfect for everybody, but it is really good information as a starting point and information to take to your accountant or your business consultant or anybody like that who you happen to be talking to. I've also taken the advantage, if you'll notice at the bottom of the screen, to highlight proper record keeping is required if you want to make the business claims we're talking about. Everything that we talk about, everything that we do is 100% above board. We're never going to suggest you do something that you shouldn't do, so keeping records is a definite important part because we only want to claim expenses which are legitimate. All right, so I can't move forward. Hang on one second. This doesn't want to advance. I think it figured I needed to talk more about the disclaimer. Okay, so why are you here? Well, question. Normally I ask this in a room and people can tell me. It's hard when I'm talking to people around the world, but just think to yourself, who here likes paying taxes? And do you feel like you're paying too much taxes? If you don't feel like you're paying too much taxes, or you do like paying taxes, this might not be the right seminar because we're going to talk about the exact opposite. We're going to talk about how to save money instead of spend it. And are you aware of how much you pay in Canada or in the United States? And I'm going to talk about some different parts of the U.S. as well. I'm going to show you how the taxes have changed over time as well. So there is lots of information in both Canada and the U.S. to find out how much income tax you pay, but you only really know one day of the year, and that happens in the following year when you actually file your tax return. That's the only time you really know exactly what you're paying in income tax. So, did you also realize you have other taxes like licenses, fees? All of these are taxes. Do you know what type you're paying? Like if you like to go hunting or fishing, you need a driver's license, you pay a fee for that. Renewing your license plates. If you have a dog and you have to pay your dog tag fee, that's another form of tax. Road tolls, airline fees. Road tolls includes gasoline tax, like the gas tax and rebate tax that are included in gases. Fuels around all over the world are extremely high. I think our governments just love fuel that way. And the et cetera, et cetera, et cetera is where it really hurts. That's where we get hit with all the little things we weren't counting on, like retail sales tax and HST and different types of GST in Canada, and you name it. Some places in the States even have taxes for the town you're in. You pay extra tax. So how much tax do you pay exactly? Well, you can look at the income tax rates for both Canada and the USA online, or you can look at your pay stub. On your pay stub, it should show you either a state or provincial tax, as well as a federal tax, as well as other deductions, Social Security or Canada pension plan, employment insurance, that sort of thing. They're all taxes. So if you add them all up, you can kind of guess how much tax you're paying. It's not a whole lot of fun when you do add it all up. And then multiply it by the number of times you get paid per year. So Tax Freedom Day, as you can see in the U.S., this is involving income tax only. And what we call Tax Freedom Day is the day of the year where you have paid all of your taxes for the year and the rest of your income is yours to keep. So if we look at 1900, way back at the turn of the into 1800s, you'll notice that it was around 5%, 5.9, and then even dropped in 1910 to 5%. Tax-free day was in the early January or third week of January. If you look down now to 2015 in the U.S., the average percentage tax is around 31%. And Tax Freedom Day is April 24th. Now you will hear Tax Freedom Day being in June or July. That's a Tax Freedom Day that also includes all of your fees, taxes, sales taxes, everything like that. This is just income tax and nothing more than that. So I also get told quite often that, oh, only Canada and the USA have to worry about income tax. Well, I've had a lot of conversations with people from Australia, and there may be some listening in now. If they are on listening, give them a big shout out because they pay a lot of tax. This is just an idea of some of the different countries around the world where I've been told there are no tax. But as you can see, Tax Freedom Day can come late in May in 2014. Australia, April 10th, 2014 was Tax Freedom Day because their tax rate's around 27.1 on average. USA, of course, is just below them at 31%. We have to go to the further down to find Canada, way down here at 157 days or 42.6% on average. And if you'll notice, that was back in 2009. They haven't released the numbers since May 2nd, 2010, according to the Fraser Institute. So I'm just wondering what the Canadian government is doing, not telling us what's going on. But at least it's not quite as bad as some of the places, Turkey, France, Norway, which actually have extremely high taxes. When you look at Norway at 56.7 in 2007, maybe we're lucky. Maybe where our taxes are a little bit lower. If you know somebody in Norway, get hold of them and get them started in GWT. They need to. So let's look at just a calculator from the Fraser Institute that explains just how does this tax thing work. Well, if you're a couple 50 years old earning about $80,000 a year, which is the amount they say you should be earning to have a half-decent income, and this, of course, is a lower-based income. I used a lower-based income because even at $80,000, the number is shocking. Okay, so if you earn $80,000 in Canada, and the U.S., as we know, is fairly similar, and you happen to be in Ontario, for example, you're going to pay $34,000 in income tax on that $80,000 if you're just working a straight job, which is going to take you to June 6th to pay off your income tax. So the first 157 days of the year, you get to work for the government. So it's pretty scary if you take a look, or if you think about how much time you get to work and how much of that time you get to keep the money from if you don't have a full-time business or a part-time business as well as a full-time job if you're working with a T4. So, question, would you like to learn more, about the benefits of having a home-based business in relationship to income tax deductions and savings? You notice I don't mention tax refunds. Tax refunds are a result of tax deductions, not necessarily are you going to get a refund. Because if you always pay income tax and you normally pay $10,000 a year in income tax and you pay in at the end of the year because you don't have a T4 job, but now you're going to pay in $5,000, that's a $5,000 savings. So just depending upon how your income tax is handled will determine whether or not you have a refund. If you don't pay it in, you don't get it back, is the bottom line. But if you have a T4 job, you're paying it in, and you're paying in a lot. Every North American who has a full-time job and does not have a home-based business is probably overpaying taxes to the tune of $2,000 to $10,000 every year, according to Sandy Botkin, CPA, tax attorney, author, software producer, writer, and former IRS general counsel. So if the former general counsel for the IRS is telling you that you need a home-based business, you probably need a home-based business. Robert Kiyosaki says it's the best, that the tax laws are not fair. They're written by the rich. They're written for the rich so that the rich stay rich. And if you want to be rich, you need to use the same tax laws the rich use. So Rich Dad Poor Dad says to get rich, use the rules the rich use. Now, most of us are afraid to use the rules the rich use, mainly because we don't think we have the entitlement to. We were brought up or raised with the idea that we would never be part of the rich, so don't try to even think about being rich, and don't try to use the tax laws the rich use. The government will come after you, which is the farthest from the truth. Actually, if you want to be rich, you have to pretend you are rich first. So, what type of expenses can you claim? What are the rules on what you can deduct? Well, CRA has a 34,000-page booklet to let you know exactly how to do that. The U.S. is even more complicated because of the number of states having so many different rules. But let's jump right over to Sandy Botkins again and look at what the General Counsel for the IRS says that we should be writing off. So the internet connection, cell phone service, computers, business startup costs, advertising and promotion, trips that involve business. So trips that involve business is kind of an interesting one, because with a global-based business, anywhere you travel on the globe is a business trip. So anywhere you travel can be tax deducted. We call that paycationing. You can go on a paycation anytime you want to. So all you do is you go on the same trip you would normally go on, except you talk about your business because you love your business. If you don't love your business, you probably need to look at a new business, because this is meant to be fun. The business is exciting and fun. You should enjoy it. If you're not enjoying it, find out why and talk to somebody. But when you're out there on your trip, talk to people. Do surveys if you can from the people that you have talked to, or sell product. Sandy talked to a lot of people when we went to Antigua and had a great time. So your business can be anywhere in the world, and you could go on a vacation and actually grow your business as well as write off the expenses. A percentage of your rent or mortgage. This is very important. Even in the United States, you have to now look at what expenses can be written off that you would normally be paying as far as a house or mortgage goes. So your mortgage interest can be partially tax deductible. Your property tax, your fees for the city, your hydro, your gas, utilities, whatever you have. If you need to replace a roof on the house, if you need to put in a new driveway, a percentage of everything. If you have to replace the floors, you want to paint the walls, keep your receipts. It's all part of your tax deductions. And even if you rent, a portion of your rent can be written off. So that we can get into a lot more detail on. Also, if you want to think about it this way, especially if you're earning a little bit more money, you might want to look at donations, because donations can give you cash back on your tax return as well, and give you more cash back than they actually cost you sometimes. And let's face it, our business is designed to help us earn more money so that we can help others. So helping others is part of donations and part of what we want to have happening. So this is, if you want to take a screenshot, we'll give you a list of expenses on a short order. We'll go into an example of this one in just a minute, but I just want you to have that there so you can see where the different expenses are. So this is an example of one, and I use this one because this was an actual tax return completed this year for a young man, and it's very conservative. Therefore, I know that no matter where we're talking about, we're not stretching. You'll notice at the bottom we use 31%, which is the average tax in the U.S. So we didn't use a higher tax bracket like Australia or Ontario or Canada, mainly because it was the actual tax rate for the gentleman was around 31%. So we look at his cell phone around $120 a month, which gives him $1,440 for the year. Internet connection, $100 a month, $1,200 for the year. Car we'll look at down below because we have a few extra things to do with it. Meals and expenses, here you'll see we've got it written off at $250 per month for a total of $3,000. But you'll notice there's a little 50% in brackets there. That means that we're only allowed to claim 50% of the meals, so this is actually a $500 a month claim. All right, now office expense down below is $100 a month. That's really conservative, considering that every single thing in your office, your desk, your computer, your paper, your printer, your ink, your staples, your chair, your desk, the paint on your wall, everything is 100% tax deductible in your office. So I can see that number being much higher than $100 without even spending more money than you normally would to have your room all nice and easy to work in. And of course, travel anywhere in the world. You can go to 2 conventions as well per year anywhere in the world and claim all of the expenses. Meal expenses are at 100% on travel. Your expenses from the time you leave your house until the time you arrive back to your house are deductible. So taxis, airplanes, meals, hotels, registration fees, anything like that. And you can do, like I said, 2 conventions per year and any number of trips that's necessary for your business. In this case, the gentleman only went to Las Vegas once to shake hands with the 6-figure earners and to find out how to become one. And it cost him $1,856, so we cut that out by 12 to show you $154 a month. Promotion, we limit it down to $169.50 or $2,034. Some of you may recognize that number if you're from Canada. Otherwise, it's $150 plus HST. So it's just the IA. If you're not familiar with IA, don't worry about it. Ask the person who asked you onto the web link, and you can find out about that. Rent, and we've left it blank. You'll notice there's no rent there. That is because this young man lives at home at the time that his tax return was completed for the year 2014. He was living at home. He does not want to leave the house until his parents' mortgage is paid off. So he's helping his parents pay down their mortgage so that he can go out and buy his own house. But he won't do it till they're mortgage free, which is pretty good. Pretty thoughtful young man. And he also doesn't want to claim anything that he gets towards a mortgage as a deduction so that they don't have to claim it as income, which is, again, pretty helpful for them. But you could put in here the amount of your rent at around 20% rent, 20 to 30%. We look at the square footage of your home and how much you're using, or the number of rooms, how many rooms you're using for business, to come up with the percentage of what you can claim. Or you can claim, like I mentioned, your property tax, your mortgage interest, repairs and maintenance on the house, a new driveway if you need one, and roof, whatever can go in this, anything that do with your house whatsoever. On the next line we have $3,500, which is the cost of a reasonable cost for a home-based business, bringing our total to $14,230. Then we look at the car, and you'll see $410 for insurance, $400 for fuel, $100 for maintenance, and $500 a month for lease or finance. You can lease or finance a vehicle. It doesn't matter which way it goes. I always get asked which is the better way. It depends on what is the better deal for you. Because in a financing situation, if you own the vehicle and you're paying interest on it, we can write off a portion of the interest and we can write off a portion of the vehicle. If you lease the vehicle, we can write off a portion of the entire amount of the lease. So either way works out pretty close to the same. And in this case, we're looking at about $16,920 per year to operate his vehicle. 50% of that towards the business, 50% goes towards his regular job and his part-time or in his activities, but 50% was going towards his part-time job. So we end up claiming $8,460 and add it to the $14,230 above, gives us a nice round tax deduction of $22,690. As you can see, at 31%, that would give you a tax return or return on expenses. So it would either refund you or reduce your taxes by $7,034. Now, that sounds like a pretty big number to some people. It may sound like a small number. But in this young man's estimation, it was pretty nice, especially when he received the check on the 25th of March 2015 directly deposited to his bank account at $7,032.74. He was a very happy camper at 7:04 in the morning, as you can see by his screenshot. So this is just a comparison that you can see where it actually worked out almost to the penny, which means the right amount of tax was being deducted from him at work, and his tax refund equaled the amount of his tax savings that was generated by his small or home-based business. So now that we know we have all these expenses, how do we track them? We want to track and make sure that everything stays 100% above board to the point where no matter what happens, if Revenue Canada comes and asks or IRS comes and asks you questions on any of your paperwork, we are going to be able to answer the questions fully and never have a problem with audits. In fact, we've won 4 audits already this year. The latest one, the lady received $8,500 and some odd dollars during Forensic Networker. On the Monday following Forensic Networker, Revenue Canada deposited $8,500 to her bank account. So we haven't had any problems with Revenue Canada whatsoever. We've had questions from them, and we've answered every one of them. So how do we do this? Well, we keep everything. By everything, I mean all your receipts, all your invoices, all your bills, absolutely everything you pay for, we keep the paperwork. If you pay for it on the internet, when you finish paying for it, hit print. The paper and the ink is tax deductible as well, so we might as well use it. And by keeping that bill, we don't forget to claim it at the end of the year. Plus, we can be detailed on it. Write notes. What was it for? Who was there? When was it? Why were you paying for it? If it's something you're buying, a utility bill you're paying, anything, keep track of what it is. There are online tools that will help you with doing that. So there are simple spreadsheets you could use actually as well. You can just use the regular spreadsheet and keep track of your expenses based on the categories that we talked about above. Would be pretty easy. iPhone and Android computer or phones have apps on them that you can use to keep track of your expenses. You can even take photos of invoices or receipts, especially if you've gone out to a meal. Your car mileage, however, I recommend that you track your mileage. Get a little book that you keep track of when you go on a trip. If you're going somewhere for business, just open up the book to today, to the date, write in where you're going, and set your trip tick to 0. Go off on your trip, do whatever you need to do. When you come home and you're calling it a day, just look at your trip tick, write down beside where you were going, how much your mileage is on the trip tick, and reset it to 0. No math, no fuss, no muss. It's really easy to do. And also you can get a 12-month folio. So a folio is like an expanding file folder from Staples or any office supply location near you where they have actually 12-month separation, and on it says December, January, February, March, whatever, and just drop in all your bills for each month into the folio. I recommend that at the end of each month or within a month or so that you go and you add up all of the receipts by category, because at the end of the year we need the numbers. Having the receipts are great. Knowing what they total is even greater. So what else do you need? Or how else are you tracking your expenses? Well, write down on the receipt everything. I know I'm repeating this, but sometimes it needs to be repeated. Who was there? Rewrite the date and the amount of the receipt, because if you are using, or if you receive a receipt that's printed off of a thermal image type printer, it will fade. If it comes from a gas station or a restaurant or places like that, it's going to fade very quickly, and Revenue Canada is going to ask you about the information long after that receipt is garbage. So rewrite the date and the amount in ink, or write over the amount, or take a photograph of the receipt. A photograph is now considered a legal source document. And the purpose of the meeting. If you're meeting with somebody or you're going out to dinner for somebody, write down what it is. If you're going out to dinner with your significant other, write down what you're doing, what business you're talking about. Before your hors d'oeuvres arrive or your drinks arrive, talk about the business, what needs to be done, what you could do to improve it, that sort of thing, and enjoy your evening. So your purpose of your meeting could be introduction, tour or presentation, training. So a launch pad, a next 30 days, product training, compensation plan training, even tax training. It doesn't matter what it is. If you're learning, you're earning. If you're earning, you're paying more tax. So the government wants you to write it off. Well, they don't want you to write it off. Allow you to write it off. Joining and launching are also tax deductible, and follow-up. Now, follow-up is very small in cost. Now, we're talking about sending out emails, calling people on the phone, dropping by or going and inviting them for coffee, having a short meeting with them, sitting down and talking about the business with them a 15th or 20th time. It doesn't matter how many times or how many years it takes. Sometimes it takes people 2 or 3 years to get started. Without follow-up, though, you don't have a business, so you don't need to bother keeping track of anything, except you don't get any tax deductions then. So the most expensive thing and the most inexpensive thing you have is follow-up. It's most expensive because it can cost you your entire business. It's the least expensive because it takes only a little bit of time to do. There's a business tracking template at ourgwt.com, which is Renee's website. On the left-hand column, there's all kinds of tools that you can use. So what else do you need? Well, you need to know that we're really discussing small business, sole proprietorship, home-based business right now. There is the potential for incorporating and that sort of thing, but that's a whole new conversation. So we'll talk about that at another time. You need to be able to complete a T2125 statement of business activities, as well as commission and professional activities. In Canada, that's the form. In the United States, you have to complete a Schedule C to the 1040. There it is, yeah, Schedule C on the, in the USA. These forms can be found online at your tax agency's website, but I recommend that you talk to somebody about completing them and don't try it on your own, but I'll talk about that some more. You also need, as I mentioned before, total your expenses. There's only 2 ways your expenses will get totaled. Either you will total them, or somebody you pay to do your tax return will total them. That's the only way that it can happen. So either you do it or you pay to have it done. And you need a good retirement plan. No matter what you're doing today, even if you have a full-time job with a retirement-based program, if you talk to most of the people who have retired, or you ask people who haven't gotten to that point yet, it's not enough. It's not going to be what you wanted it to be. You need more. So you need a good retirement plan. So what else do you need? Well, you need advice. Like I said, do not try it on your own. The T2125 form for Canada, the Schedule C form, or any government reporting form that has to be completed has to be fully completed correctly and accurately to be accepted by your tax department. If it's not accepted, you'll either be audited or you're not going to get your deductions right away and you're going to have to argue for them, whatever. You want to do it properly. So to get to the point of making sure it's done right, I suggest you use the services of a tax professional or a small business tax consultant, a small business consultant with a tax background, somebody who knows about both business and tax. If you walk into your tax preparer and say, I have a home-based business, what can I write off? And they say something to the effect of, oh, don't worry about it, or you don't have to calculate that. We don't need to include that. You can't write that off. There's another million excuses they use. That's just because they either don't know how to complete a T2125 or a Schedule C, or they don't want to. They simply are making more money by doing a standard personal tax return, and that's all they want to do. They're a tax preparer. You don't need to work with them. You need to work with a business specialist. So if they tell you that your home-based business is not worth writing off, fire them, find somebody else, walk out of the room. If you've earned any money whatsoever in your home-based business, so even if you've earned $50 from signing somebody up and you don't claim it, you have actually committed tax fraud. So if you made less than $500 and they say, oh, you don't have to claim it if it's under $500, they're advising you to commit a fraud. So I would highly recommend that you file your taxes and file them correctly. So what about working? What about retiring? What's the difference? Well, you can have a retirement at the end of your work time, or you can have a work-tirement at the end of your work time. It's not about how much you can earn, it's about how much you can keep. And as you can tell by our discussion, we're trying to find ways of keeping as much as possible in your pocket and not in Uncle Sam's or letting the government take care of it for you. We all know how great the government is at taking care of our money. You know, they never do wasteful things or blow it on stupid little items like you would do, right? No, they just spend it on things you don't care about. So why do I say that? And why do I say you need a good retirement plan? Well, you need to think about it. You need to think long and hard. Will you be able to survive in retirement on $1,000 a month? If you do, that means you have no mortgage, no payments, no kids, and you don't mind not eating, because $1,000 a month is not going to take you very far when it comes to utilities, fuel, car, that sort of thing. You need $2,000 a month, or you're more likely to need $5,000 or more. Don't forget there's income tax on that $5,000. So if your income tax is at 31%, you're losing a big chunk of that $5,000 to start with. So, you know, if that $3,400 is going to help you through the year, that $3,400 a month, if not, then you need to make a little bit more. Again, it's not about how much you earn, it's how much you keep that makes a difference. Forbes did a survey to see how many middle-class Americans said that they could retire or would retire. And believe it or not, they said 52% of middle-class Americans said that they would work until the day they die. That's a pretty sad number when you think about it at 52%. Unfortunately, they were wrong. In reality, it's closer to 83%. 83% of middle-class Americans will either be dead or dead broke before they can retire. It's just that hard to retire these days. And I was even joking or talking with a doctor not too long ago, and he mentioned that he was on the Freedom 75 plan because he's going to, even as a doctor, he's going to have to work till he's 75 to be able to retire. In fact, only 5% of North Americans actually get to retire with the retirement they actually envisioned when they were younger and working their bum off and being told that the world was a oyster and was their place and that they'd have this great retirement and everything, and then the government starts looking for ways of getting jobs for senior citizens. So how does the retirement plan work? Well, if you need $5,000 a month income, you need to have $1.2 million saved in an account that's paying 5% per year interest. If you are already earning 5% per year interest, you're doing great, because most people are hard pressed to get past 1%, let alone 2% per year interest on their money they're earning. If you're in the stock market and you're making a little bit more than that this year, a little less last year, a little more the year before, it keeps going all over the place. The only problem is there's no guarantee. In fact, you're probably very worried right now with the way the stock market has tumbled dramatically. If you need $10,000 a month, you need to be saving, you need to have $2.4 million in savings at 5% as well. Now, if you flip it around and look at it a slightly different way, if you had a $5,000 a month residual check coming in, so every month you receive $5,000 residual income, that's like having $1.2 million in the bank. If your residual income check happens to be $10,000 per month, that's like having $2.4 million in the bank. Congratulations, you're a multimillionaire. If your residual check, just think about it, was $100,000 a month like Renee's is, that's like having $24 million sitting in the bank. Yes, you want to be Renee's friend. Where will the money come from when you retire? Is it going to come from Canada Pension Plan Old Age Security? Well, the Canada Pension Plan has some problems. It's done really well in its earnings. In fact, last year it broke a record. It earned a record 21%. However, they paid out a increase 37% more in benefits. Therefore, they lost money over the year. Old Age Security has already admitted that they will not be in business for more than another decade or so. RSPs become RIFs in Canada. They become withdrawal plans in the US, and you're required to take out a certain amount. I actually did the math. Believe it or not, I like doing math. If you save $5,000 a year in an RRSP in Canada or the US in a savings plan, you would save about $105,000 over 21 years. Over the 21-year period, if you're able to maintain a 5% growth on that money, you would have about $186,000 saved. That $186,000 is only going to give you $948 a month after tax, if it's in a RIF or an RSP or trying to remember the name in the US, but you know what I mean. If you have a corporate pension plan that could bring in a couple $100 to $1,000, I just did a review with a couple today that they're getting $122.17 from his retirement plan from the Tile Workers Union. Not a whole lot, that's for sure. Or are you going to be looking at work-retirement? Walmart, you want to be a greeter at Walmart. You'll notice that the greeters at Walmart are a little bit older. And especially in Canada, the retail industry has laid off so many people that it may even be hard to get those jobs. So you'd be looking at McDonald's. You want fries with that? Hard to say. Or you could have a strategic retirement plan that you control. So first question is, how is your retirement plan going so far? Are you putting enough money away? Are you able to pay mortgage, utilities, travel, medical expenses, car expenses, or help your children in retirement based on the way your plan is working out right now? If not, you need to sit down and think about it. You need to look at a good retirement plan strategy and get it started. So why not look at a business that is also a strategic retirement plan all in one? A business that will help you save money during the years in which you're growing it, save $2,000 to $10,000 in income tax today, and as it grows, it'll provide you with a strategic retirement plan 5 to 7, 10 years from now. You could be receiving the same type of residual income Renee's receiving of $100,000 a month. But why look at it as looking for $100,000 a month, unless that's where you want to look? What about if it just paid you $10,000 a month? What if it paid you $7,000 a month? Wouldn't that be significantly better than what you're getting based on what your current plans are? right? So look at a strategic retirement plan that you contribute to and that you can have fully fund your retirement. Seize the moment. And this is another bit of a retirement thing that you can think about. This 65, or this was between 65 and 85 feet, I didn't measure it, sitting at a resort running with staff on board while the owners were up in the all-inclusive resort in Antigua when we were there. It was there for the entire week that we spent in Antigua. How rich do you have to be to walk away from this yacht and stay in a hotel? I don't know. I think I'd be on the boat. Global wealth trade is the freedom business. It is proven. It is a proven system with an unlimited potential, with an enormous growth potential. Right now, we're on a growth spurt, and everything is moving forward in such a fantastic way with a 10-year-old company that it's just unbelievable. Was there something else you wanted me to go over, Sherry? Are you still there?
Hello, Robert. Sorry, of course
Oh,
I'm here. I just mute myself. Can you hear me now?
I can hear you just fine. Yeah, sorry.
Okay, great. Yeah, because while you're talking, I was taking notes myself too, and I just mute myself just in case my baby is crying. So, uh, amazing presentation again. Thank you so much. And I believe we do have people have a lot of questions. And so for those of you who are attending this live, and if you understand who global wealth trade is, great. If you don't, please go to the someone who invite you to see this presentation, get to know more about this home-based business, but that's growing globally. And in the meantime, I think it's a great opportunity. We have 10 more minutes. We can answer the questions that you may have about anything that's tax related. Um, Robert is my accountant right now. He's actually helping me on my taxes. I'm so glad that actually I found him to file my taxes, because I spoke with so many people who said they are professional, who said they understand home-based business, who said they understand, they file taxes for like 10, 20 years, but they don't really know what we are talking about. So I'm very fortunate that I think, I have someone that at least speaks our language. So,
And we also found somebody in Australia who's doing it as well. So the
oh,
Australian
nice,
has a connection as well.
perfect.
So that's fantastic. And we're working on somebody in LA right now, trying to get her online and
Okay.
informed. So we have a strong U.S. presence as well, hopefully shortly.
Nice. But I think if you know, you do know the business inside out. You do know the tax part inside out. And I would rather to give you the business than anyone else, because you have the experience, and you know the business, and you know everything tax related about this business too. So I feel safe with you. One thing about my personally, I have the experience. I had somebody who said she was a very experienced tax person, and then I hired her to do my taxes, and hire her to do my mom's taxes. My mom is actually also a luxury consultant, and what she did is she actually did some retail sales. She didn't do a lot of recruiting. She was she had a job. So I got her to file taxes. However, my mom got an audit, and she couldn't stand behind her, and we end up pay back $2,500 to the CRA, and that's a bad taste to our end. Then if I know you by then, I know it's going to be totally different story. Just you just said, even you make $50, you made income from the business, then you should file taxes, and it should we have everything, but we didn't have someone that's good enough to stand behind us.
Right. Yeah, you have to be prepared, and that's what I do. Is I guarantee the work right to the point where we deal with Revenue Canada or the IRS right up until both of you are satisfied. We don't let it go. If you get a letter from Revenue Canada or from the IRS, don't necessarily pay it right away.
Mm-hmm.
Check and see if it's correct first of all, because
Right.
they make more mistakes than most people do. And
Mm-hmm.
secondly, you want to check and see if there's, their assumptions are probably mistaken. So
Absolutely.
if you actually made a claim, there's probably a good reason you made that claim.
Yeah.
And I would think that we should not be just writing it off and paying Revenue Canada just because they say, send me a check.
Yeah, yeah, exactly. So a good tax preparer and a good accountant is very necessary, and as someone who understand the business, who understand the whole concept behind it, who understand what inventory account is, and who understand everything about this business was is a huge bonus. So that's why I personally hire Robert to even do my taxes in U.S. and Canada. I have to file on both ends, but then I trust Robert can do just a really fine job. Um, but compared to any other one that I have spoke with so far. So I do before people sending their questions. I do have some questions. I think it's important if you don't mind to answer. Um,
Absolutely.
Great. So the first question is a couple. I like to say a couple who husband has a full-time job and wife has a home-based business. They file joint taxes. Can wife's business expense offset the husband's full-time job income?
Yes. Yeah, absolutely. We could claim it either way because uh, family law, the
Mm-hmm.
business is owned by both of you, and we can claim it based on effort put in by each member
Okay.
and be able to reduce the taxable income. Some
Mm-hmm.
states and even in Canada right now, we do have a system in place where you can split your net income.
Mm-hmm.
So with income splitting and things like that, uh, it does become a deduction for the higher earner, which
Mm-hmm.
is where we want to save the taxes on the higher income earner anyway.
Perfect, perfect. So I think that can help a lot of people in this sense because a lot of doesn't matter house husband or housewife, if they have a business and the other partner can actually benefit from it.
Right, yeah. The higher tax earner, the higher
Mm-hmm.
taxpayer wants the deductions whenever possible.
Perfect. That's great. So I remember in your presentation you mentioned in Canada, if someone's income full-time job is $80,000, they need to pay $34,000 in income tax. Is that correct?
Yes, yeah.
That's crazy.
That's a scary number, but that is according to the Forbes, the Fraser Institute, that's
Right.
exactly how much the taxation would be, and that is a scary amount of money to have to pay out.
That is like more than 35%. Yeah, like if it's 100,000, 35,000, that's 35%. I don't have my calculator with me, but what's the
Around
percentage of that?
28%, but if you exceed $100,000, you're getting close in Canada to 42 and 46% taxes. So
Wow.
if you're at $100,000 a year, not a month like Renee, but a
Right.
year, you're looking at $46,000 in income tax.
Right. Wow. 40-some% over 100,000 income. Wow.
Right. I do have a client actually who has a full-time job, has a T4 slip job.
Mhm.
He's a manager, upper management in a company. He makes around $380,000 a year,
Mhm.
and his tax bill this year was trying to remember the exact amount, but it was a little over $87,000.
$87,000 in taxes.
And that was after deductions. So he had a few deductions he could do.
Wow, that is
But
great.
not a home-based business. Try to, he needs a home-based business, that's for sure.
Absolutely. So, okay, great. Another question that I have. So you saying travel? So, because we do eat here too, like at home too, right? Like we do go to restaurants. So meal is a 50% deduction, if I'm correct.
That's right. Any meals that you have that are outside of the home can be
Uh-huh.
written off by 50%. It's
Right.
difficult to write off meals inside the home unless it's for a specific party or something. But when you go outside the home, meals are tax deductible.
Nice. We should eat out more.
But eating out more may lead to bad diets and stuff like that. But if that's my problem. I work so much that I don't get to eat at the right times. I have to be careful.
Right. So, but when you travel to the other town or the other country, when you travel, the meal is 100% deductible. Correct.
Yes. All 100% of your expenses when you're traveling are
Uh-huh.
deductible.
Mm-hmm. Okay, so make sure that people understand that part. I know you mentioned it, but it's the after the presentation, I want to make sure that everyone understands the difference. And so for me personally, I like to go to different networking events. When I go to networking events, we have the meal over there. Um, say it's $20 meal to participate in that networking event. It's 100% deductible or 50% deductible.
That would be 100% deductible, as it would. How you would put it down is that the fee for the event is $20,
Right.
and if that fee happens to include a meal,
Hmm.
that's a bonus. But it costs you $20 to be there, so
Right.
that's 100% deductible.
Okay, great. That's good. So
There's a lot of things that we pay for in life that we would normally pay for that you would think, well, they're not really tax or business expenses, like
hmm
your internet at home. But
hmm
really, if you don't have your internet at home, you're out of business. So 100% of it, even if you use it yourself from
yeah,
time to time, it's still
yeah,
100% deductible.
yeah, absolutely. So the other question I have is I actually did talk to you about it, and you mentioned it briefly also regarding donations. So, in our business of Global Wall Street, we are in the luxury items, and we talk about the beautiful handbags and jewelry and all shoes and whatever. And that's luxury fashion related, and it's actually a great donation. A lot of charities like to have this at that event that they can do silent auctions or live auctions, and when they do that, it's actually accumulate. It's helping them to get more funds for that charity. So what
Right.
I did personally last year. I was in Hawaii, and I happened to get to know this charity called Ronald McDonald House, and I donated two fairy purse from my own, use my own account in inventory account, money in my inventory account, got two purse and donated to them. The retail price for those two purse together is about $1,023 altogether. I actually post that on Facebook. And I would like to ask you, um, so in terms of donation, so uh, is that accounting me donated over $1,000, or it's count as I donated $600, around $600 for my wholesale pricing?
Right. But with your receipt from Ronald McDonald House was for 1,000 or a
Yes,
little over 1,000, you can
because
claim the 1,000.
because that's what they see, right? They see on a I ask them to make the choice. Whatever they like to choose, I make that donation. So they chose those 2 handbags, and I just made the purchase through my member pricing.
Right.
So that is over $1,000 donation basically.
Right. So it costs you about $600, and you're going to get about $300 of it back from the government. So it's a pretty nice way to help out.
Absolutely. So meaning I help the charity and make the have to raise their funds, and I got money back from the government. I got some
Right.
money back from the government, and so that's the beauty of our business, I guess.
Oh yes, that's for sure. And let's face it, Ramin's is always for giving and helping.
Right.
He's a big heart himself, and he wants us to give back. And when we can give back, and it helps us on our taxes as well.
Yeah.
Well, most people who do large donations do it for the tax deductions as well, right?
Yeah.
That's part of the reason for doing it. The government actually likes it. They promote it.
Yeah.
Right?
Yeah, as long as it's legit and I have the paper, I have the letter, I have the receipt provided from these certain charities that I made that donation, so I can get certain amount of money back from the government. So it's a win-win situation basically.
Right. Yeah, it's a win-win-win.
Yes.
Right? Everybody, especially the children, and let's face it, the reason you donated it was because the work they do.
Yes.
Right?
Yes.
So you wanted to support the work they do, which again is another win.
Yes.
Because it helps them to do more work and help other people.
Yes. Okay. Great. So we do have a couple questions from the audience, and I think the rest of people are very quiet. But the first one I can answer basically, the call is recorded. The second question from this, I think it's this lady, and she's saying, "Hello, my husband and I are both working full time and working in the for the GWT business, and how would that affect our business, our taxes?"
It would they would file if they have one BDM or they're one LC together. They would file depending upon whether they're in Canada or the U.S. or does it say where they're from?
She didn't mention. If you can please type in, or I can unmute you to ask the question yourself. Just one sec.
Right. Because
I think
you would file.
Shovina. Yeah.
You can definitely save on income tax from both of them.
Right.
Or one of them, or the higher income earner, whichever way works better for them. But it definitely is going to save them a lot of taxes.
Right.
I mean, 2 income earners, 2 high income earners are going to like 2 full-time jobs. Yes, definitely.
This lady is from Australia. I just unmuted you, Travina. Hello.
Yeah, they're
Hi, Sherry.
Hello, hi.
Hi, how you going?
Doing great. How are you?
I'm good, thank you. Excuse my voice. I've got a cold at the moment.
I know
Are you
it's
feeling
early.
better
Yeah,
yet?
the question.
Go ahead, please.
Can you hear me?
Yes, we can hear you well.
Yes.
Please go ahead.
Thank you. My husband and I both work full time. We're also trying to do the GWT business on the side. I just want to know how that would affect our business. It's one BDM between us.
Right. So what I would do is I'd file your BDM. You in Australia, you each file a tax return, correct? Or do you file one like? Yeah. So you take the business and you split it between you, and you can even split the percentages. Sorry.
Okay.
And you do have an expert.
We also rent.
Sorry, I think I cut you off. Go ahead.
Yes, no, he's pretty good. He's very good. I think he does a lot of businesses as well. So we haven't done our taxes as of yet, but hopefully he'll be able to. I just want to get some info on it so that when I do sit down and talk with him, I have the information that I need.
Right. So you want
for
to
him
keep
to
all
look
of your. all of the information we talked about tonight, everything that we've talked about. He's aware of it. If he has any questions, he knows he can get hold of me as well, which I don't think he probably needs. He's got a lot of experience too. So, but it would definitely help both of you, and I would definitely file it as a split business, depending upon your income levels. And just in case other people are listening and saying, wow, she's really late filing her tax return, this is the normal time for taxes in Australia.
Yes.
It's what,
yes.
is it July? I think
yes,
is your tax.
July.
Yeah. Most, like in the U.S., it's April 15th, and in Canada, it's May or April 30th or June 15th if you have a business. So, but Australia, it's in July.
And in New Zealand, it's March.
It's actually winter in Australia right now. Most people don't realize that.
No, I'm sitting in front of fire. Well, thank you. I'll definitely take that on board and appreciate your time.
No problem. Thank you, and thank you for all your help down there.
Thank you.
Okay, great. Thank you so much, Travina, calling all the way from Australia. And I do have Anthony has hands up, and let me unmute Anthony, and so he can speak. He can ask his questions. Hello, Anthony. Are you there? Anthony, you are muted on your side. So if you can unmute yourself, and you can talk. I know you see your hands been raised, and so I just unmuted you. In the meantime, question from Katrina. This webinar is recorded for those who aren't able to jump on today. So don't worry, it is recorded, and I will upload it as soon as possible today. So Anthony, are you there?
Hello. Yeah, can you hear me crystal clear?
Yes, I can hear you. Yes, go ahead, please.
Yeah, I wanted to find out also from all I've heard so far so good. I'm new here in Canada. I wanted to find out if it's possible for one to have a full-time job and also to be able to own home business, so one could file income tax with it.
Oh, absolutely. That's the whole plan. That's exactly what we want you to do. Work full-time if you have, like, to make sure that you have a good income. But
Yep.
when you have a home-based business, we can reduce the amount of income tax by up to $10,000 a year because you're going to be paying full income tax on your job.
Okay, beautiful. Okay, if I am doing a full-time job, so what kind of a home business will I be participating?
Well, the GWT is the best home-based business that I've experienced to work with, and it's realistically the easiest one to work with because it's always online. It's an online business, and it's a product that sells itself. But
Okay.
Whoever gave you the information to jump on the webinar today,
Yep.
they should be able to help you out, or you can always contact me by email or by phone or Facebook as well for information.
Okay.
Whereabouts in Canada are you?
I live in Toronto.
Oh,
Wow,
that's
a
good.
far away. I'm in just north of Brampton.
Anthony,
But
Anthony, may I ask? Hello, Anthony.
Yeah.
No,
Yeah.
I just want to ask, how did you find out tonight's webinar?
I actually I actually joined the link through a friend. She just got me invited this evening. She told me about it in the morning,
Okay.
and this evening she called me and sent me the link.
Okay, great. So
give her a kiss on the cheek because she just saved you $10,000.
Yeah, I intend to give her even more than just a kiss on the cheek, even.
Yeah, definitely. If you have questions, let me know. If I can help you or her, I will. That is,
Yeah.
no
Okay,
problem.
I'll be able to reach you via her. Then I'll speak with her in the morning or after this seminar, and I think we'll take it from there then.
Absolutely. And you can also write down my phone number and information. You can contact me directly. Just let me know who she is if we're doing anything. I can help you get signed up and everything, but you would be under her. And I would like to talk with her as well, of course, right? Or I'd like you talking with her. But definitely, definitely. If you have a question, you can call me directly.
What will the number be?
If it should be on your screen. If not, it's 647-403-5381.
Okay.
Were you able to get that?
Good. 647-403-5381.
Perfect.
Okay. Thanks a lot.
No problem. Anytime I can help, I look forward to it. I'll help anybody in the world, so I might as well help people in Toronto too.
That'll be beautiful. Thanks a lot.
No problem, Anthony. Have a great night.
That'll be all for now.
Thank you so much. Thank you, Anthony. Make sure that you contact your friend who introduced you to this business, to this webinar, and so get to know more about the business. I believe that the lady who introduced you who understand the business too. So we do have some some people thanking sending the message say thank you. It's very informative. I would say thank you, myself personally. Thank you so much again for amazing webinar. We are going to do it again, of course, the fourth Monday